Okay, today we're going to talk about how does the market actually move. And the first thing that we're going to focus on is the uptrend and the idea of creating higher highs and higher lows. So looking at this chart right here, every time you see a swing in the market and a reversal, I want you to start looking at that as a higher low, right? So what I mean by this is you see this swing right here, right? The market comes down and starts going back up. That reversal creates this low. You see the market swings up and starts coming back down. This swing right here, it's known as a swing high, and that high is created right here, right? And we have that swing below causing another reversal, and we see this higher low is created. So during an uptrend, what you're going to notice is that every single low is going to be higher than the other one, and every single high is also going to be higher than the other one. So we have consecutive higher lows, higher lows, higher lows, and consecutive higher highs and higher highs. When we have this creation of higher highs and higher lows, what's going to happen is you can play off of a break to the top side, a return to make a higher low, and this is where we can capitalize off of. But it's how do you identify when the market is going to make a higher low, right? You identify when the market is going to make a higher low by order blocks. So an order block is a visible spot on the chart where a large order is being placed in the market, and you will see a quick move from that region with very strong candles. So what that looks like in the chart is that if you look right here, for example, when price creates this higher high, right, it's relatively strong candles coming off of this area right here, right? It has strong candles to break this, initiating a chance for a higher low to be created. Now, if you look at the top and the bottom of this black candle, we know that large orders are being placed off of this black candle because look at the size of this candle compared to this one, compared to this one, compared to this one, and compared to this one. It's just a nice, very nice, strong candle. And the same thing applies for right here, right? So we see that price comes down here, taps into that higher low, and then it also starts to go to the top side again. So if we look at this black candle right here, right, we see a little swing to the top side, consolidation. You see this strong candle, this moderately strong candle, and this strong candle. And then we see all these strong candles to the top side, breaking this high to do what? Create another higher high. So when that happens, we're going to be looking for in the future a higher low to be created. And we know a higher low is going to be created because we have that order block right here where we see a strong push come off of a lot of strong candles. We know that a large order is being placed in the market at that time. So then when it returns to that order block, we're going to be looking to capitalize off of it right here. And the same thing happens in the future. We see another break creating another higher high potentially, and maybe somewhere someday in the future it will turn to this order block right here, have a reaction to create some type of higher low. So what that looks like when there's nothing on your chart, when price is actually developing, as you can see right here, we see a consolidation, we see a break to the top side, has this high, and this high. It creates a higher high, right? But notice how strong all of these candles are as it pushes past all of these highs. So we know that our potential buy zone is going to be down here, right? There's a potential for a lower high to be created for a move to the top side. And as you can see right here, that black candle before that strong move is what we consider our order block. Now you may be wondering, what's this green area down here? Now, this green area is a way that you can refine your entries because as you zoom in, you will find smaller order blocks on smaller time frames, right? You see, this is a 1 minute chart. We see an order block right here. This is the same topside move. So rather than a trade looking like this, where if you were to, so let's say this red area is your stop loss area, right? It's the area where if price is trading into this, we're in the danger zone in our trade. We're not making money. And if it breaks below this red area, we're going to sell our trade. And the green area is okay, your trade is good. It's making money. It's going where it needs to go. Notice how big this zone is, right? Notice how big the danger zone is when you only draw an order block without refining it. But if I refine the order block, right? This is that same order block we seen in that previous picture, just on a smaller time frame. That's why it's just small. You see that danger area becomes a lot smaller. And so what we're expecting is when price trades down into this zone down here, we're going to buy calls to the upside, right? If you trade stock options, you're going to be buying calls and then you're going to wait for that move to the top side. And now what that actually looks like in real time is that we see that break, we see that swing to the downside, we see it come down in the morning, taps right into this, right? It's a very quick tap because this is a 1 minute order block. We see that very nice strong push to the top side to create what? It creates another high that's higher than this one. And right, and so this just goes to show that in an uptrend, price will keep creating higher highs and higher lows. This low right here, we see this higher low, and we see this higher low. And that is how to identify when to enter the market and when to buy calls and what to look for in an uptrend.